with last week's announcement that there will be a review into capital gains tax, here is why it's going to be a good thing for property investors. Hey, what's up guys, Dan Trevidi here. I hope you're all well. Last week there was an announcement that the Chancellor has instructed a review of the capital gains tax, and I wasn't going to do a video on this. I was going to wait for the detail to come, but there has been so many YouTubers and Facebook gurus posting on this subject, and all they're doing is copy and pasting what is on the government's website, not giving any of their insight, any of their experience to what this could mean for property investors. And nearly all of them are suggesting that it's going to be negative. And I can't believe it. These guys have got some massive experience behind them, so they say. It is so frustrating to see, because look at what the Chancellor has done already, and it hasn't had a negative impact. It's had a positive impact, and this change is going to be no different. So in this video, I'm going to give you my opinion, and it is only my opinion, but if you look back at my previous videos, my opinion has been absolutely right throughout the government changes and throughout the market shifts in the lockdown. Take what you will from it, but I'm now going to give you my opinion on what I think the changes are going to be and how that is going to affect property investors. So here's my little rant before we get into it. It is so frustrating to see these guys who claim to be investing in property for 30 years and who claim to be gazillionaires with 1 million properties and who claim to be the advocates of the property world. And it's actually all a load of rubbish because they haven't got a bloody clue what they're talking about, because the reality is they're more interested in selling advertising mentorships than they are investing in the current market and shifting and moving and getting the great deals and talking about it openly and honestly and giving all the information, because they want to hold it back and drop the seeds and sell you something. So just be really mindful about who you take note of and who you listen to, because they have ulterior motives. Okay, so that's my little rant out of the way, and don't get me wrong, I'm one for taking the piss and doing impressions. So if you want to see me do some impressions of these guys and take it a little bit further, then leave a comment in the box below and I'll start to do it, because I'm going to have some fun with these guys. Right, okay, a really quick video, short and sweet, but here is some of the insights. So we know the Chancellor has ordered a review of the current capital gains tax, and I am not going to get into the detail about what the current thresholds are and for all the different sectors. You can go on the government website and you can find that out for yourselves. You don't need to listen to my video to give you the facts on the government website. My video is about my opinion about what is to come. Now, if we go back to the stamp duty and the issues with the market, there was loads of opinions about why stamp duty would not be removed, and it would do this and it would do that, and why would the government not take advantage of the market price adjustments. But the reality is the government recognised, and the Chancellor recognises, that the way to create a sustainable, growing economy is to have a thriving housing market. And if the review led to a capital gains increase overall and didn't encourage growth and movement and trading, then that is a really quick way of nipping it in the bud and killing the housing market very quickly. Because let's break it down. Some of the opinions out there, which are the capital gains tax rate, which is currently at around 28% if you sell a property, is going to increase to fall in line with the income threshold. And that may well be the case, but let's just park that for a second, because there is some other ways it could increase or it could change. It could fall in line with the dividend rate, which I think is more realistic. Don't get me wrong, it is still a hefty increase on what it is today. Do I also think that the threshold of 0% capital gains is going to go, which is around 11, 12 grand per person at the moment? Yes, I do. They're going to remove value of 0% capital gains thresholds. It's just the nature of the beast for second homes. But here's the big one. People are talking about the Chancellor bringing in a capital gains tax when you sell your prime residence, which I do think is completely wrong. I don't see that happening at all. However, if it does, it's going to fall in line with a similar structure, which I think is going to happen on all the other ones I just mentioned. And here's what it is. So at the moment, when you sell a business, a trading business, whatever that gain is, you can offset that. You can defer that amount if you reinvest the amount into another trading business or multiple trading businesses. So it encourages people who have sold their business to reinvest that money into other businesses, which is a great way of encouraging people to start companies, buy companies, invest in companies, which in turn creates more growth, jobs, bigger economy, all of the things that the Chancellor and the government are trying to achieve. And I would bet a huge sum of money, and if anyone wants to take that bet, feel free to private message me, that there is going to be a similar deferred tax on capital gain. So do I think that capital gain tax overall is going to increase pound for pound versus what it is today? Yes, I do. Do I think that the increase is going to come harder for second home owners, buy-to-let investors and multiple property owners? Yes, I do. Do I think it's coming for the prime residents? No, I don't. But if it is, it's going to be exactly the same. There is going to be a way to defer that tax by reinvesting that money into other properties, because the Chancellor wants people to buy and sell properties, and they want multiple people across multiple markets, across multiple segments, across multiple geographical areas to all be doing this. And a great way to do this is to encourage people to put that money that they've just earned, the profit that is taxable, into another deal. And a deferred tax rate with a capital gain hike is going to come. And I can't see any other way that this is going to happen. And anyone who hasn't seen that or doesn't forecast that, I question, what you're doing in property. How can you not see this coming? And I think it's going to be great for property investors, because that means if you're buying a property and you're flipping it on and you've got capital gains, and then you can roll that into another deal to make more money. Yes, you will have to pay that tax eventually, but it's always deferred. It's a great way to make more money. This opinion that I'm giving, it isn't just off the cuff, firing from the hip. I've done some research into this, and the average profit that is liable for capital gains tax across the whole UK only delivers about 8 grand in tax per unit averaged out. But if you take the average sale price of a house and then the stamp duty that the government earns from that, it's pretty much the same. So why would the government risk stopping or stalling the housing market by bringing in a capital gains that is going to stop you and me from buying and selling houses in that way, when they can make just about the same sort of tax revenue if they encourage per property on stamp duty? And if they encourage you to buy and sell more properties, that means more transactions are happening, which means that the income per unit is multiplied. So it's just a complete no-brainer. So I might not be 100% right, but I would not be surprised if we see something similar brought in by the Chancellor to encourage people to start selling and buying and continuing that long term. Now, a lot of you will be investing and buying through limited companies. Now, whatever changes I think that are coming into play won't affect limited companies. It really can't, because the way the tax system is done for companies. However, whatever is announced, whether it does affect companies or it doesn't, you will have to take a different view and rework those numbers, because now it may become more tax efficient to buy and sell using your personal name, which would be a massive game changer for the amount of money that you're keeping in your pocket. But remember, if anything comes in deferred, you will have to pay it eventually. So lots of things to consider. That's my opinion on what I believe the review is going to achieve and what is going to be announced in the autumn budget. So let's keep an eye on it, and we'll remember this video. I may be completely wrong, but I may be right in some shape or form. Let's hear your opinions in the comments section below. Don't forget to do me a huge favor and smash the like button and hit subscribe. But that's it from me. Hope you found the content rich. I'll catch you all on the next video.